Go with our first guest, Dhananjay Sinha, Head of Institutional Research at Emkay Global Financial Services, now joins in. Dhananjay, hi, good morning. We've seen a bit of a consolidation phase, correction phase for the market. Would you buy now for a pre-budget rally, or would you actually wait out, see the budget and then take fresh positions?
So I think what has really happened is broadly that you had a significant run up until the election, and it sustained for some more time. But I think what is now happening is that some realism is seeping in. I think what I will do is basically to wait for the budget, because at this juncture I would say in the price there is a considerable amount of optimism still left. In the context that people believe that the government will be able to resolve a lot of things. I think there is a certain hint with respect to the budget and the future policy, wherein the government is saying that we'll have to take some tough measures. So I think it will be very relevant to really look at what the budget will be, because that is going to be the first statement of this budget officially in terms of policy. So over there, there will be very specific repercussions for sectors and stocks, etc. So I think one should actually wait for that. And in the current context, if you look at the forward multiple, so if you look at the Nifty forward multiple of close to 16 times, that with respect to the GDP, the growth adjusted multiple would be as high as 3 versus a long-term average of about 2. So I think there is a considerable amount of optimism that is there in the price, and I think a significant portion is on the back of the fact that markets have expectation from the government, and also the fact that you had global liquidity which was actually supporting Indian markets. So I think going forward, some of these things will start is ebbing, and you are seeing that rupee is actually weakening. And after the ECB decided to cut the rates to minus 0.25%. So I think on the back of that, dollar index has actually strengthened and rupee is actually weakened. And as a result, you see that people are coming back into things like IT and pharma, and people are selling off some of the cyclicals which have run up far beyond their fundamentals. So I think that is what is happening. Now going forward, we'll have to wait for the budget.
Okay. Dhananjay, hi, good to see you in today. So if in case, there is some amount of profit booking that is taking place in the cyclicals, and there is some amount of interest coming back into the defensives, what is the strategy that you are recommending to your clients ahead of the budget? Would that be your asset allocation which you'd be recommending as well?
Yeah, I think this is what we had said when we released our report on 22nd of May, and we said that people should, because some of these stocks in pharma and IT names had actually corrected quite significantly, and hence I thought there is a value there. And on the context of on the backdrop of the fact that all the cyclicals had run up quite significantly, it was very pertinent to actually reverse that trade, whereas the consensus view was still very pro-cyclical. So I think that is the strategy that we had prescribed, and that is something that is playing out, and we continue to hold on to that view, and we'll have to assess the budget, and we look at specific policy measures and the implication, and then look at specific stocks. We have to reconsider the cyclical stocks going forward.
Dhananjay, the stocks of the day today have been KN India and ONGC. Would you buy these stocks at current level, and the upstream companies, and what about even the downstream companies? Would they be good bets here at current levels?
No, I think as far as KN is concerned, there are specific triggers over there with respect to debt restructuring and rescheduling of loans, etc. So there is a certain easing of balance sheet concerns over there, and I think a lot of it has also got an embedded trigger with respect to what happens in the Middle East with the ban that was imposed by the US on the Middle East sourcing that they had. I think those are the two things that are there. I'm not sure about the second one, but definitely there is a certain amount of comfort with respect to the balance sheet. With respect to the oil sector, I think one of the things that are being expected of the budget is that there will be rationalization of fuel subsidy. As a result of that, there might be a phased increase in LPG price, and maybe there will be a one-time increase in the diesel price, etc. So I think there will be a certain reform bias with respect to the oil sector. Hence, I think the oil sector stock should be doing fine. The other thing that I wanted to highlight is that the government will also have to do a significant amount of disinvestment. Our estimate is that it could be to the tune of something like 55 to 60,000 crores in terms of what the government might actually require to do in this year. And partly there would also be a focus on dividend payouts from the PSU stock. So if you consider the potential names that the government can actually do significant disinvestment, Coal India is definitely one. But if you look at the large cap PSU companies, these are largely in the space of oil and gas, and hence I would believe that the government would actually announce some of these positive reform kind of measures to actually boost the sentiment in favor of these stocks. So I think there might be a certain amount of positivity one can actually consider with respect to oil PSU companies.
What about power? Would that be a space that you would be interested in, maybe pre or post budget?
No, we have been overweight on power sector. So I think alongside issues relating to coal supply, etc. There might be certain positive move over there, and we believe that the coal sector generally would actually do well. See, we have been fairly positive on the power sector, so that is there in our strategy.
Dhananjay, in the mid-cap basket, any 3 or 4 stock recommendations that you can give us?
We have been talking about in the agri space. We have been talking about DCM, Shriram, for instance, and Coromandel. So these are the 2 things that we have been looking at. And we were in the media space. In the large cap we had Z, but in the mid cap we were looking at DB Corp. And in the IT space we were very positive on NIT technology. Apart from that, in the infrastructure and capital goods space, we had been generally constructive. While in the large cap, we were inclined in favor of L&T, but in the mid cap space, we were liking Adani Port, IRD, Ashoka Buildcon, and Sadbhav. These are the stocks that we were considering. Given the underlying context is that the way we are hearing, the things that we are hearing from the government is that there will be a lot of push on the infrastructure space on roads and railways, etc. So at this juncture, I mean, some of these announcements are yet to be crystallized into exact measures on the ground. But I think there is a positive sentiment in favor of infra space, and hence these stocks are something that we have been liking.
Okay, fair enough, Dhananjay. We leave you at that. Thank you very much for joining in. So that's the word coming in from Emkay Global.